Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take through the key events I believe will be driving your investments in the coming days. Now, we've obviously had this bombing in Syria over the weekend. Between the US, French and UK military have all engaged in a bombing campaign to try and rid Syria of its chemical weapons manufacturer. Now, it's an important fact in the markets in that it sort of increases the geopolitical risk into the market, and how markets respond to that is normally through safe haven plays. They usually start to buy the yen, start to buy gold, and treasury yields would start to fall. Now, it's interesting that that has not happened, and moving into Monday morning, we've got a fairly settled market sentiment. Seems as though that the markets are taking this as a very limited mission that the US, UK and France are going to be engaging in. They're not going to look to ramp it up. But obviously there is that added risk in the background that could still happen. Now, that would suggest that even though equity markets are sort of looking fairly stable today, there is obviously that risk that could happen at sometime in the near future. At the moment, it doesn't seem to be the risk. And what we have seen is therefore sort of this news-driven trading flow that we've been having over the last few weeks. Obviously, the trade dispute between US and China had been the primary function of factor of that, but also moving into now this whole Syrian issue as well. But again, that seems to be sort of dying down a little bit in terms of market sentiment. They're looking sort of more risk positive, and what we are seeing is sort of improvement in risk appetite through the forex majors. You're seeing equity markets fairly settled, and the safe haven plays are not benefiting. So this is an interesting move in this market, in these markets that we are seeing early this week. Now, whether that continues, if there is an escalation in the Syrian conflict, remains to be seen. But at the moment, the markets are fairly settled. So we can sort of look towards other factors, and we've got earnings season in the US, and we've got a bit of tier one data through this week, and it will be interesting to see, as I said, how markets sort of start to react going forward. Certainly, earnings season tends to be a big driver of US stocks and sentiment. And at the moment, certainly on Friday, we had the US banks, which were outperforming and did better than expectation, and certainly started off earnings season on a decent footing. It's going to be a strong earnings season. Around about 17% is the forecast for S&P 500 earnings growth. So that's a big earnings season potentially that we're going to see. So this is a key factor coming through this week. We've also got UK data. Really important actually for UK investors. So certainly sterling traders will be looking at the wage growth. They'll be looking at inflation through this week, and the chart on the slide here, we can see that wages have been rising as inflation has been just rolling over. Now that is certainly a driver of potential for the we've got the inflation data this week, which could start to sort of tail off a little bit and start to sort of flatten out, and that could help to sort of encourage the Bank of England to hike interest rates in May meeting, which is the expectation at the moment. And there's nothing really that would suggest, if that does come out to be the case, then that will be happening. So you've got inflation in the UK. Wage growth this week is the key factors for UK, but you've also got retail sales for the States on on Monday. That is a big factor. A bit of volatility on Monday afternoon could start to drive a bit of US direction as well, and that will be something that the markets will be looking out for. Now, in terms of forex markets, well, we've seen euro dollar, which the euro data or eurozone data has been particularly underwhelming, shall we say, in the last few weeks. And that has sort of meant that the euro has lost traction, because the dollar tends to have been a bit of an underperforming currency. But even with that underperforming dollar, the euro hasn't really managed to gain any sort of ground. Sterling, on the other hand, has been finding some support, pushing higher. You've got an increasingly sort of encouraging outlook for Brexit. as the talks seem to be going okay. But also Theresa May's personal standing in the polls seems to have been improving. Now, how that is affected by this Syrian issue remains to be seen, but certainly at the moment that sort of makes for a bit more of a stable UK political environment, helping sterling higher. And in terms of cable, that means it's pushing out towards multi-year highs again, towards the highs not seen since Brexit. 43.45 on cable is a key level of resistance. If you can break through that, sort of back towards the levels of seen prior to Brexit. So really important breakout that would be on sterling. In terms of dollar yen, again, sort of a bit of an improvement in risk appetite has seen the yen sort of falling out of favour a little bit. Dollar yen rallying back towards the 107 area, but there's a big resistance band, 107.50 to 107.90, that the markets will be looking out for. So the yen crosses still tend to be sort of slipping a little bit, but it'll be interesting to see if dollar yen can break out to the upside, because that would be a key sort of trigger. I think you'd see that across a lot of the yen pairs. And we've also got the Bank of Canada monetary policy meeting. No change expected on Wednesday. We've still got NAFTA rolling on in the background. Expected to sort of get a decent outcome for the Canadians, but I think it's too early for the Bank of Canada to really sort of get too confident about that happening. So in terms of equity markets, we have seen equity markets recovering as risk appetite has improved in the last couple of weeks. And the DAX has been at the forefront of that, but also FTSE 100 has been benefiting as well. So these markets are sort of looking at testing some key reaction highs that we saw back from February, and it'll be interesting to see if that can break out to the upside. 12,600 is key on the DAX, so we'll be looking out for that as a key level. Now, the S&P 500 is also on a recovery mode. Interestingly, it's now coming up to a point at which it could start to complete a head and shoulders reversal, a base pattern, and that is not too far from completion, and the markets will be looking out for a move above 2,675, I think it is, as the key levels break to the upside. If that was to be seen, that could be about 120 tick of base pattern recovery target. Now, commodities. Well, we've seen some key factors driving the gold price at the moment. We've got the Syrian geopolitical situation and also the weakness of the dollar. So these two factors that are driving gold. Now, can gold continue to push higher? Still remains in a range play over the last few months. Can it break out to the upside? It certainly threatened that last week, and again, it'll be sort of a look at the key levels potentially this week if the geopolitical situation sort of starts to simmer up again, and 1366 is that key level. In terms of oil, again, a driver of oil price to the upside has been that increased sort of geopolitical tensions in the Middle East. Iran is a key factor there, and how the US treat the sanctions going forward. Certainly think it doesn't sort of bode especially well, and that's why the oil price has been driving high. You've got rig counts going up, you've got inventories which continues to sort of build as well, which is not all that positive for the oil price. So there's some conflicting factors there, but there is an expectation that the oil market is becoming more in balance, and that is helping to support the oil price to the downside anyway. So at the moment, oil price remains supported. So in terms of key data points this week, well, we've got the US retail sales on Monday, but key factor to watch out for also in the middle of the week is the Chinese data. You've got GDP, you've got retail sales, you've got industrial production all on Tuesday morning, and that could have a key factor on risk appetite as well. So watch out for that in the early European morning, how markets respond to those data points. As I said, you've got the UK wage growth and unemployment on Wednesday as well, along with CPI on Thursday. So some key factors to watch out for UK side. Not a huge amount of US data beyond Monday's retail sales, but the UK retail sales round off the week on Friday. So quite a lot of tier 1 data to watch out for this week, but we'll obviously be still looking out for that continued sort of movement around Syria and how that geopolitical situation continues to develop. So with that in mind, I wish you good luck in your trading this week, and I will speak to you next time. Thank you.